just starting very shortly. Um,
High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hi traders, welcome to Live Trading Workshop. Today, Live Trading Workshop purpose is to give you the truth of trading by interviewing top traders and solution providers to give you different perspectives of trading the markets on the smart money framework so as to help you achieve consistent trading performance. It's still Napan here, founder of Master the Markets Illustrates Conference and Traders Open Day. Today we have a very interesting guest, Ross Maxwell. Just a little bit about Ross Maxwell before I bring him in and introduce him to all of you. He's a seasoned day trader and trading mentor with over 20 years of experience in the financial markets. He's also been educating and mentoring traders around the globe since 2017 and is the founder of Key Zone Traders. Ross, welcome to Live Trading Workshop.
Thanks very much for having me. It's a pleasure to be here.
All right, nice, and nice and sunny today here as well. That's good.
Yes,
always a
it makes
bonus,
a change,
isn't it? Right? I know there's a bit of contrast over the weekend, but I think we're getting on the upslope before the Euro starts and everything. So
fingers crossed. A bit of sun makes everyone happier, right?
Yeah, absolutely. Coming into the world of trading, just so that the audience get a little bit to know about you before we dive into the charts and what's going on in the markets today and go into some live charts at the moment. Tell us a little bit, like, how did you get into this world of trading? How old were you when you started, or what event triggered your interest? Do you do other things along with trading, or do you just do it full time?
Yeah, so the beginnings of the story start way back when I was still at school. I remember it was in a careers session, and maths was always a strong point of mine. And I sort of said I wanted to be involved with something to do with numbers to like the careers advisor, and she was like, "Oh, well, then you want to maybe go into sort of like something to do with finance." And that was sort of really the seeds of where it started to be sown, sort of thing. So I left school at 18 and I wanted to get into like the financial institutions and stuff. And that was my aim basically. So I left school at 18, moved into, got my first job, and I was just in sort of back office doing settlements, you know, that sort of side of things, some of the more admin office junior roles. But I made it quite well known that actually my aim was to move into the front office and get on the trading desks. So I was lucky that I made a good start with the company. They put me through what was then like my FSA exams and got into trading. I started trading South African equity derivatives quite early on. So I was probably about 22 when I first started trading South African equity derivatives. And that's what I did for 10 years from my time in London. I moved to Hong Kong, spent some years in Hong Kong. Moved back to London before deciding that I wanted a little bit more freedom over my own time, a little bit more flexibility. So I decided to leave the life in London and become an independent trader myself. And that was in 2014. And I've been trading as an independent trader ever since, basically.
Oh, interesting, isn't it? It's always nice to always hear the stories and see the journey of the trader, how he actually comes across. It's nice that your career advisor told you that you'd be good at math, and that left you, and you were quite keen in finance, and then that brought you to the next step, and then you wanted some freedom, and then here we are, right? And you founded it in 2017, your own company. Is that right?
So I started. So basically, I met a couple of other mentors, and they had their own education company. So I met them in 2017, and I started mentoring for them, doing their like mentoring their clients and their students and stuff. And it was in 2021 that I left them to set up my own Key Zone Traders business. Just to
Right.
put my own stamp and have it again a bit more individuality on education and putting my own strategies and ideas and stuff across.
That's great. I think that brings us nicely into, like what's your kind of style of trading and looking into more your concepts. So tell us a little bit. Are you more mainly a swing trader, scalp trader, position trader, etc., or do you mainly do intraday trading, or is it more end of day? Or what is it then? Tell us a
Yeah,
little
so
bit.
very much I would consider myself a day trader. I'm more than a scalper, so I generally trade off like the 15-minute and the 1 hour chart. I like to be in and out of my trades within the same session. That's more from a psychological point of view, from a personal point of view. I like, waking up in the morning with a clear head, not thinking about what position, what's happened overnight. I can go through my morning routine, sit down at the desk with like a clear, unbiased view of the markets, and then make my decision based on what I'm looking at that time. So yeah, in terms of my actual trading, I'm very much an intraday trader, and I think as a mentor, what I've learned over the years, especially as well, it's not about putting my own ideas onto other traders. It's about traders finding their own individual style and what works for them, what works for their goals, their lifestyle, that sort of thing. Because somebody may prefer to be a scalper or a day trader because they need to be in and out the markets too quickly. If they hold positions too long, maybe they over manage it, they think about it too much. Whereas others, they need that the higher time frame stuff because they don't have the time, or they make more mistakes when they've got to think really quickly about a position or something like that. So I think it's very important to find what works for you as an individual, as a trader, and really focus on building those sorts of skills.
It's so true, isn't it? I mean, that's what I tell all the clients as well is you can't have a perfect strategy that fits all the boxes, right?
No,
There'll
no.
always be pros and cons of everything.
Yeah,
And it's what then finally fits your personality, then you keep with it.
yeah,
And I really like Bruce Lee's philosophy where he says, I don't fear a man who has learned thousand kicks, but I fear a man who has learned one kick thousands of
1,000 times.
times.
Yeah,
So just exactly what you're saying, if in your personality, if it is you want to get in and out within the day, that's has got its pros and cons. You don't need to think about what happens the next day, in and out very quickly. And that'll be really interesting today because Ross, our main style is more on higher time frames, basically. We stuck with a bit of more higher time frames, and yours
yeah,
more intraday. So I think it's really going to be good treat for the clients to give a different perspective, and that's what we always want to do by inviting different people here
yeah,
on live trading workshop. So we have actually segmented the whole thing into different sections, like how you would think about in terms of a strategy. So we'll first go into the entry side of things, right? So here I've got we just let your clients and our clients know what our kind of framework is, and let's see how yours fits into the whole picture. For example, I mean, just in a nutshell, how we actually look at most of the things, and I'm sure you probably will look at similar as well. Whichever chart, doesn't matter whether it's a currency, commodity, or futures or indexes. We first always look at getting the direction, right? And the direction we usually will get from what the trend is, what the phase is. Because we are mainly quant based, and we were taught all this framework back in from the 1960s when it started. We've got what is quite unique here. We've got something where the tops and bottoms are quantified. We can see the orange and the blue arrows, right? You can see that, and everybody else can see that too. And then we get that bottom confirmed by the blue dot, and then the top confirmed by the orange dot. So as of today in cable, if I'm looking at cable here, we always look at where the price is today in relation to its swing, right? So this was where the bottom got confirmed by the dot. So I put a cross over here roughly, and here we are today. So I think most of the people here will agree that today the price is quite far away from the bottom, even though it's in an uptrend phase one. And we usually will say that, the move left to the upside, there's a low probability of it continuing further because it's quite far off. Because then, as you and I would agree, nothing can go in a straight line forever, right?
Not exactly, yeah.
Exactly, right. If it did, I think all of us can quit our jobs tomorrow, isn't it? You
Yeah,
just enter in one
the S&P and
direction.
the Dow Jones have given it a try a few times, right? But even they come
Yeah,
back
that's
a
very
turn.
true. Yeah, I think that shocked a lot of traders and investors actually. But as you can see, I mean, everything has got to end, especially because markets move in cycles.
Yeah.
So this is how we look at it. So the first main question we always ask is, okay, how much move is left? Is there high probability can continue further or not? If it's not, we stand back or we take a position, right? So that's how we look at. So by this framework, we can see it's open equity is diminishing, open profit is diminishing to the upside, and we got tables to look at that, etc., and everything. So that's how we usually look at things, and you can apply that to the entire markets. Even in gold, you can see it's just in a downtrend. According to our framework here, you can see it's still in an uptrend here. Still hasn't taken out the last swing over here, and there's still a lot of move left because the bottom just got confirmed, right, on the daily time frame. But of course, we haven't correlated the higher time frames yet. And the S&P, if I just quickly take a look, and as we were talking about it, it's also in an uptrend at the moment, but just a bit of a retracement, phase two, and then which would be good to get your insight on. Is that going to be a support level where it bounces off and then the bottom is going to confirm? So that's how roughly we look at and the smart money framework what we have put in. So now it will be good to get your perspective on how do you actually, because our main thing is how much move is left, and then we decide from then on how do we enter, manage, and then exit. So, from your perspective, in terms of the entry side of things, is there like a concept that you have to all the trade setups that you take?
Yeah, so basically, my concept is basically support and resistance. So I'm trying to identify the institutional order flow in the market, the footprints that they've left in the market by the repetitive behavior. So obviously, it's the institutional order flow which moves the markets. It's not us as retail traders, as much as we would like to try. It's not us that's going to move the market. So every sort of directional move is created by the institutions. So what I try and look for is I look for this repetitive behavior, this repetitive support and resistance, strong reactions in the market where there clearly has been institutional order flow in the past, and that means there is a high probability that there is likely to be one there again. And if you just going back to your S&P chart back there, I had a support and resistance. I had a support area at 5,200, which is exactly where it reacted on the Friday. And
Mm-hmm.
I can show you some why I sort of maybe thought of that in when I go into my charts. But basically, I guess if you tie it into the strategy you've got there, we know we're in an overall uptrend. We know we've hit a support zone. If you now see a bottom confirmed, that is a really high probability chance that the market is going to move higher. You know that the market has had a retracement. You know it's hit a support zone. If you've got the confirmation from your system, then actually like you're tying all of these things in to give yourself a better chance of the trade. And I mean, so I don't look at phase one, phase two, like the Elliott wave type thing. I look at impulsive corrective price action, which is effectively the same thing, just slightly dressed up slightly differently. Like I'm looking for a strong move, knowing that the market will retrace. I want that retracement to be corrective so that I know that the initial trend is still in place. And then I'm looking for, once I see that impulsive push, I look for the corrective move back to an area of support, look for the area of support to be hit where the institutional order flow is, and then that would be my signal to get in.
That's phenomenal because I think that ties in a lot with our stuff. In fact, I think most traders will be looking at that, isn't it, Ross? Because where is it going to bounce off? Is the support going to hold? You know what the good thing about this framework, what we designed is if whatever that you say is true, that institutional order flow has come here, it will seem logical that it will hold that bottom. It's got to keep going up higher. And according to our formulas that the quant traders have given us, the blue dot will come at some point and will
Yeah,
confirm that bottom,
yeah,
right? And then from that point, whenever a swing is confirmed, we would expect that if your formulas are good and your framework is good, there should be more move left, right?
Yeah.
because anytime a bottom is confirmed, if it immediately reverses, then there's something wrong, right?
Yeah.
And it takes away that 5 to 100. So I think that'd be very interesting to see how you get confidence in that institutional order flow coming in to support that place. And I think it'll be good to compare it with our framework to see, how many times does that really get confirmed. Just one quick thing, in terms of Elliott waves, I mean, yeah, I've looked into them, but I think they can get really complicated. I mean, when
Yeah.
we talk about phase one and twos, we simply mean that in an uptrend, it's like you said, it's got a retracement move. That's called
Yeah.
the phase two.
Yeah.
And then after that, it comes back into phase one again. And then that's all. It just keeps repeating one, two, until it changes its trend.
Exactly. So, I mean, basically, your
So they
phase
keep it
one is
simple.
my impulsive move. Your phase two is my
Exactly.
corrective moves. It's exactly.
Exactly, right. So there's different words, but
Yeah.
saying the same thing. But
Yeah.
yeah, you know what? I think what would be good at this point, if you can share one of your charts and show us how your typical trade entry would look like. If you
Cool.
want to use the S&P, that'd be great. I will just stop the share over here.
Yeah.
And if you
I
can,
have
yeah,
just shared my screen. You're probably seeing the Nasdaq there at the moment. Let me just get my S&P screen up and
yeah.
show
I think
you.
as you're showing that, I'll just ask the participants if you all can see Ross's chart. Okay, I can see it fine. If you all can see it okay as well, please
Yeah.
type in yes into the chat box. And if you've got any questions along the way as well, please just type it in. I think Glenn can also remind you guys to put any questions that you guys got, which we'll be taking towards the end. Go for it, Ross. Yeah, I
Okay,
think
cool.
most of
So
them are able to see it. Yeah.
yeah. So basically, what I'm looking at, I'm on a 4 hour chart here because that was the area that I actually plotted this level on. But I mean, again, this sort of I follow the same process when I'm looking at my 15-minute charts, my 1 hour charts, and you can use it for the daily charts and stuff as well. So I use a very much a blank chart, and what I do is I I plot zones. So I look at support and resistance in terms of zones. Reason being, the institutional order flow is not at one particular fixed level, right? Like if institutions just put all their order flow at one level, the markets would be a lot easier to predict the levels that they're going to react from and stuff. They sort of layer it in. So I'm looking for the areas in the market that they're starting to really look for. I use the average true range as a bit of a guide as to how wide I want that area to be. Because if we end up having really wide zones, then it becomes irrelevant because we're trying to be as precise as possible as to where the institutional order flow is, and we want to be looking in areas that is quite clean. We don't want too much choppiness around those areas. So basically, what I do is I would plot a zone, and this 5200 area here is exactly what I would look at there. And so even before last week, if we go to the replay function and just pull it back before what I was seeing, what I can see from the S&P is that we had come up, we had created this area here, which was an all-time high. There, the market had broken through that level, so we're continuing that uptrend. Again, you've got your phase two, the corrective pullback. And then we've got a really strong reaction from that zone. So we've held it as resistance. We've broken through. Phase two has held it again. So, and what you really want to see is you want to see strong participation, like strong rejections from these areas, because that will mean that order flow will still be remaining there as well. If the price comes back into those areas, then there'll be expected to be some form of reaction because, again, if we think about it from a pure sort of technical point of view, where anyone who has been long from anywhere in this area here, generally speaking, their stop will be below that zone because that is at what point the market is invalidated or the trend may continue. So therefore, this area is likely to want to be defended. So, and then I personally just look for, I just place my order in that zone. I would have my stop beyond the zone, and I would go for a target. So I would have targeted somewhere sort of like this swing low here, because again, that's an area in the market where the market has reacted from the other side. And if you went down to the lower time frames, you can actually see that I would have a zone in this area here because we've got support that has turned resistance on the retest there. So that is an area that if the market moved into it, then I think that the market would potentially react from, because there's
So Ross, let me understand this so that the viewers can also understand, and those listening from YouTube as well,
yeah.
is that so you're looking for a long position in when it comes into the zone, is that right?
Yes, exactly. Yeah, I'm just looking for price to move into the zone. It's not, sometimes it's not quite as black and white as
Of
this.
course.
Like, obviously, you need to understand market structure, you need to understand the price action going into the zone. But generally speaking, I know this is a strong area of support that the institutions are going to want to defend. So that is an area that I'm looking to buy. And then I'm looking for the area in the opposite area in the market whereby there's institutional order flow that could react, and you can see I can clearly identify there's a very clear swing point here. Once price broke through, it then came back and it retested it as resistance, and then it started to move lower. So that would be the area that I would target. And you can see 2.7 R trade going there, and then literally the market came down and then went up into it. So it's actually gone further.
Got
But
you.
I personally would just look for the next area in the market to try and get. And again, this comes down to my style of trading in the fact that I don't like to hold positions overnight. If you've got a longer term view that the market is going to go higher, there's nothing wrong with you holding that trade longer and overnight and stuff. But I personally, I'm just looking, again, going back to my style of trading, I'm looking for sort of like 1.5 to 3 to 1 risk to reward winners within one session so that I can get out and then I can come back the following day and look again.
Nice. Quick question on that. So you've got no fear in, even though it looks like a downtrend forming on the 4 hour, but
Mm-hmm.
that doesn't deter you taking a long position.
Not at all, because if we go to the higher thing again, you go back to what you said about looking at the direction, the over. Like you have a higher time frame context. So you have your execution time frame, but you have a context in the market whereby actually we know, there can be no one that can disagree that the equity markets at the moment is in an uptrend, right? The equity markets are bullish. So when the equity markets are bullish, or any market for that matter, then there's always going to be buyers stepping in at some point because they're going to continue the overall trend. Not always, obviously, but more the higher probability is that at
Right.
some point the buyers are going to step in. So you're looking for those areas where there is a higher chance that the buyers are going to look to step in, and that's what I'm looking for on those. And again, it's left by the footprint of the institutional order flow previously as to where they've moved the markets.
Great. And the zone you get it from the support and resistance levels from before, which is what you have drawn over here, right?
Yes, yeah, exactly.
Great. And I think actually I was correlating that with our charts over here. That actually nicely correlates with our swing high and swing lows as well, because
Yeah.
I think eventually, I mean, any support and resistance got to become either a swing high or swing low, isn't it?
Well, exactly.
Um,
A swing high. Effectively, I'm looking for those really clean swing high and swing lows where the
yeah.
institutions have moved the thing, because that's what's going to leave the footprint, right? So, yeah, naturally, your swing highs and swing lows will leave me my visual clues as to where the institutions are moving the markets from.
Got you. Yeah, that's right. So I think it'd be really nice if people can even overlay it on top and see if
Yeah,
our framework and your thinking actually confirms. And I'm sure when it confirms, you
yeah,
will get a higher probability trade, like with everything, when you get a confluence of factors.
yeah,
Um,
exactly.
in fact, that's how we actually work with Trade Guider as well on the volume perspective, because when you get the confluence, it becomes more stronger.
Yeah.
Right. So that's on the entry. So thanks for that. That really made it very clear. Well, quite quick yes or no question, and you can explain as well. Do you scale into your trades in terms of an entry kind of a thing?
No, I personally don't. However, I have taught clients to do so previously as well. Like again, so although I'm a day trader, I'm a very risk averse, very selective trader, right? So even as a day trader, again, something I sort of sit there and say to my students is like, just because you're a day trader doesn't mean to say you have to trade every day. And I'm very much of that nature. Like I don't trade every day. So when I find these really strong levels that I like the look of, I will attack them quite aggressively. So I will go in with my entry towards the top of the zone, stop below the zone, and I will have my targets. But there's quite often this can I don't know that the market's going to react from the very top of that zone. If the market could come down, it could even poke its head below in what I call a liquidity grab, which like that stop hunting phenomenon that goes on in the market sometimes. I don't know that for sure, so I allow room in my stops and things for that to take place, and I'm comfortable that I can take a bit of a drawdown in a trade, and as long as that zone holds, I'm still comfortable with the trade selection. But there's nothing against scaling into that position through that zone. That's what the institutions do. So if it's good enough for them, why would it not be good enough for other people? Personally, I choose not to, but there would be nothing wrong with scaling into that throughout that zone.
Absolutely. And I think it comes down to what you were saying just now, isn't it? It depends on the personality of the person. I mean, personally, me, myself, I've kept it very simple in terms of scaling in and scaling out. I don't really scale in, but how we scale in, actually, we've got different strategies.
Yeah.
And some strategies might be scaling in onto the same position. So that's how we have done that. But that's thanks for sharing on from your side. And is there any like best trade to date so far comes in your memory? And when I say best trade to date, it doesn't mean it's got to be the biggest profit or whatever. The one that you learned the most lesson from, and what was the thinking behind your entry?
Yeah, I don't think there's any. I mean, I think actually one thing that stood me in really good stead for becoming an independent trader was my time in the city in terms of understanding risks involved. So I think for me, it wasn't necessarily one particular trade. It was it's just being able to consistently execute in the markets. No one trade for me is really different to the other. I have my plan, I execute it, and I follow that process. So I think if you're sort of sitting there and asking one particular moment in time, I remember when I was sort of like probably about a year, 9 months to a year into my trading journey as an independent trader. And I had to go through this. I had my own mentor because I had to go through this period of re-education from the way that I looked at the markets from working in the city to as an independent trader, and also from a psychological and emotional point of view. It's very different trading somebody else's money to trading your own money. And I remember there was a 2 week period where I didn't actually trade. I had no trade whatsoever. And I was starting to think, was I doing something wrong? Was I getting sort of like hesitant in the markets? I was speaking to my mentors, explaining my reason for not taking certain trades that were setting up, and they were all very rational. And I remember in the 3rd week, I had 3 trades, 3 winners, and it being like, well, there's my justification for being patient and stuff. And I think that was one of the things that really clicked. So it wasn't a particular trade in general. It was just that moment when I realized that I could follow my trade plan and have rational thought process and not push for trades just because I felt like I had to trade, sort of thing.
Yeah, good stuff. I think the P word always keeps coming, isn't it? Patience, right? It's
Yeah.
such a key thing in trading.
Yeah.
In fact, you see that from all the interviews from all the top traders out there as well. So yeah, that's nice. Thanks for sharing that. Now moving on to stop loss and everything, right? Is a big topic, that one, stop losses. Now the way we look at stop losses in terms of our framework is either putting it behind the swing low or the swing high, whichever direction you're taking, and then managing it, but at the same time giving it enough room to move before it gets to our objective of target. So, from your perspective, how do you actually use stops? And do you place your stops usually? If no, then what do you use to exit from the market?
Yeah, so 100%, I never trade without a stop. If anything happens that's out of your control or anything, the markets can move very quickly, in very short spaces of time. So you don't really want to be putting your capital at risk. I think, like, if you want to allow a trade to breathe, basically what I do is I pick the invalidation point. At what point in the market, if the market moves into that area, does my trade become invalid? At what point, like, does my trade setup, my trade idea, the idea that I think the market is going to do, at what point is that invalidated? And that's where I'll have my stop. So when I'm looking for this zone of support, well, naturally speaking, the stop will have to be below that zone, because some form of acceptance, some sort of the market is allowed to move, because I think I may not always get my zones completely precise, the market can move just below and then shoot straight back up again. That can happen quite often. But in that case, if I'm allowing for that, then I need to have my stop below where I think the market can move to, but still move higher. So I will always trade with a stop, and the idea will be that it's where the market, the idea that I have for the market will become invalidated.
Okay, that's a good one because I've heard that from before. But when does your position become invalidated is where you place your stop loss. And how have you come to that over the years? Is it through some testing or is it just by looking at your results? And is there a concept behind it? Like, can
Yeah,
you give it a
I
bit
think
of...
naturally it's just become a bit of an intuition over time. I think when I very first started my trading journey, I didn't trade exactly the same way as I did now. I was looking for reversal patterns and things like that. And at that point, once you had the reversal pattern, your invalidation point was very clear because it was below the reversal pattern and that sort of thing. And I mean, effectively, what I'm still doing is I'm still looking. But my invalidation point will be below your swing low or your swing high, or because
Mhm,
those are the natural points in the market which are telling me that the institutional order flow has stepped in. So we've got two swing lows here in the market. So any
mhm.
stop need to be below there. So I think I used to have very clear invalidation points when I was looking for reversal patterns. Now it's a bit more of an intuition, a bit more experience. I mean, as you mentioned, I've been doing this for more than 20 years now, so it becomes a bit more of a bit more of a feeling. I know where my zone is, and I know roughly if price really starts accepting below this zone, then I don't want to be in that trade anymore. So it's knowing those sorts of things. It's a little bit more intuition than anything. I don't always get it right in terms of I still get my stop clipped every now and then, but that's just trading, right? There's nothing
Of
you can do
course.
about that. But yeah, so my invalidation point is below the zone of support or above the zone of resistance, with some room for my zone to be a little bit off, or for something to happen in the market to just give it enough room.
Okay, great. Yeah. So that's good. Now moving on, I mean, to trailing stop losses. So we talked about initial stop losses, so that was good that you shared with us.
Yeah.
So how do you usually trail your stops? Is it using time stop, money stop, technical stop? Is it a combination of them?
Yeah,
So,
so different scenarios really. Again, because I'm in and out of the markets very quickly, I'm not like within the same session. I'm not always trailing my stop for maximum effect. And again, I've got nothing against that. In fact, I have students that I've taught that do trail their stop to try and catch that full trend. And what I tend to do is I'm all about managing the risk on a position. So if I can manage the risk as an example, um, if we get to a 1-to-1 risk reward, and I'm going for a 2-to-1 target, something like that. If I take half my position off at 1-to-1, then even I can leave my stop where it is and feel very comfortable, because actually, if the market goes back and hits my stop, I still haven't lost any money, because effectively I've booked half profits and I lose half an hour, and therefore I'm flat and break even. Um, as price moves closer to target, I may move my stop up again. At what point does my trade idea become invalidated? At what point at what point on the chart does that reaction and that trend become invalidated? If I can identify that point, then I may move my stop up again. So it's looking at if we think about your phase one and phase two, maybe you go down a time frame, look for your phase one, look for your phase two, look for your phase one. As long as the market continues in that cycle in your move, then your trade idea is still valid. But once it starts breaking that cycle, then your trade idea is invalidated. So if you can start moving your stop up, again, comes back to the whole thing. You should always move your stop to reduce your risk, never move your stop to increase your risk. Right? That's the rule 101. So yeah, it'll be a hybrid of looking at the smaller trend within your trade to try and move your stop up, or scale out of the trade using risk management to reduce the risk on the overall risk on your trade.
Interesting. So you use a combination, I guess, right? Scaling out plus your trailing behind the swing lows. Is that right?
Yeah, effectively. Yeah.
Okay, yeah, that's good. Of course, I guess that I think over time you develop that patience and the confidence to wait for the pullback, to then revert back to your original favor, isn't it? I guess what catches most traders is when it pulls back is when most people get scared,
Yeah.
right? Especially when you are in the trade. So I think if people can see this, I guess this is what you're saying. So when it pulls back and then it goes back in your favor, that's when you trail it. But I guess this is the point where people get scared. Am I
Yes.
right? Yeah.
Yeah, exactly. Yeah, 100%. Yeah.
Yeah. But I guess over time they can overcome the fear. And I think to an extent where you are managing that is by a combination of scaling out and trailing.
Yeah.
And I think if that's kind of fits with you, I think that's great. That's really good. So I think you've said all of that. I think the trade even, I guess, taught you the biggest lesson. I think you already shared that. Is that something you want to share with us? Anything more on the stop loss side of things before we go into the final part of
No, I
targets?
think yeah, I think just the main thing that I always teach all my sort of students and clients and stuff that come through is really get an understanding of the risks involved. So get a really solid set of strategies and appropriate risk amounts in place. Protect your account at all times, and then everything else will take care of itself. So really, just protect capital is sort of like the one thing that I think you should base your trading on. Because if you can protect your capital, then you're always in the game.
That's great. That's awesome. So now let's move on to the final part, right? Into the target section, the exits. This is very a popular thing because I always say in all my interviews and with clients is that where you exit is where you finally realize your money because until then it's just all unrealized, isn't it?
Yeah.
Including your losses and your profits. So tell us in terms of that. So in terms of our smart money framework, I mean, we are big into open equities, looking at the stats, what's the probability that it will move this distance and that. And that's how we get our targets. In terms from your perspective, do you have a predefined target for all of your trades, or do you
Um,
exit live?
Yeah, no. So I have a predetermined target, and as I say, I mentioned this earlier on. What I would actually look to do is I look for the area in the market that there's potentially going to be a reaction from the other side. So again, if we could move down an hour a time frame
Hmm.
here, what I would do is I'd sit there and say, okay, well, look, I can see another zone, potential zone in this area here.
Yeah.
So that would be my target. And what I then do is once I've identified that, so I identify all of this before I enter my trade, right? So I'm actually looking at this and I'm formulating my trade idea. All the way back here is where I'm formulating my trade idea. And then I would sit there and go, okay, so I'm going to enter a long trade in that area there. I've got my stop behind here, and I'm going to target that zone. So I've got sort of 2.7, 2.8 to 1. Now, what I can determine then, am I happy with the risk to reward on that trade? Because sometimes I can identify an area and it might be all the way down here. And I'm like, okay, well, it's only just 1 to 1, or maybe even like 0.8 to 1. Do I really want to take a trade that is only 0.8 to 1 to 1 to 1 risk to reward? Now, for some people, that's absolutely fine. If they've got the statistics, which proves that that has an edge and that can create profits in the market, that's absolutely fine. But I'm looking for that. And so I'm looking for 1.5 to 3 to 1 risk to reward. If it falls within those parameters, then I've got a trade. I've got a trade idea. It doesn't always necessarily mean this trade will get triggered. I now have predetermined entry, stop loss, and take profit target. Now all I need to do is exercise that P word again, the patience for the market to move into the areas that I want it to, and then I have my trade. If it doesn't move into those areas, I don't trade. I look for the next opportunity, basically.
Ross, so one question on that. So it's nicely you have put in all the diagrams more easier for people to see the entry coming into here, target coming into there. one thing that I'm getting is that you mentioned before that you will enter and exit within the day, right?
Yeah.
So this distance, right, that it's got to cover after you get filled, if
Yeah.
it doesn't fill that
Yeah.
within the day, what will you do?
Then I would leave it overnight. I mean,
Ah, then you will leave it.
yeah. I
Okay,
mean, the markets are still moving overnight, right? So that's okay. What I tend to try and do is at least manage the risk on that trade. So again, if I have an opportunity to scale out of half the trade to make the trade risk free, or move like then if I can manage the risk somehow, then that's absolutely that would be great. But I'm happy to leave the trade in overnight if it's forced to. I don't just come out just because of a timing issue.
got
But
you.
generally speaking, I would sit there and say 90% of my trades are done within a trade within a session. And again, so my trading hours, I stop trading at 4 o'clock, right? So that's that. I don't past 4 o'clock. I don't enter any more trades. So I'm still, if I'm in a trade, I still have 5, 6 hours of the US session for me to manage that trade, whether it be on my laptop or on my phone or something like that. So I still have the ability to manage that trade before I go to bed, but I wouldn't enter a position in that period because it's outside of my trading hours and it would more lend itself to having to leave it overnight.
Okay, that's good that you clarify that because I think we mentioned the P word again, right? The patience, isn't it? Of course, if it doesn't get into that target, and as you and I know, it's you can't fit the markets to our kind of a box
Yeah.
that we wanted to say that you have to behave in that way. I got to hit my target within within the day to day. I mean, sometimes it just on, and as you said, most of the times it does is great.
Yeah.
And if those times that it doesn't, we got to give it some room. So that makes it a bit more clear in terms of your exits. So you would leave them overnight if they've not hit that. So let's see. So you do so the quantified exit parameters is from the support and resistance areas. A quick thing on that. I mean, do you time frame correlate to sometimes place a higher a target point or find the confluence of factors?
Yeah, for sure. I would look at higher time frame correlation to tie it all in. Obviously, if you can find a level and it ties in with a higher time frame, that adds even more weight to that level and stuff as well. And obviously, you're looking to the higher time frame to confirm the direction. So as you said on that S&P trade, lower time frame may suggest that the market is starting to move into a bit more of a negative downtrend, but actually there is nothing negative about the equity markets at the moment or the indices. They're still very so. As long as that ties in, then yeah, of course, yeah, we can look to the higher time frame to confirm the directions.
Okay, great. Then in terms of, let's see, do you, yeah, you've mentioned this before, you scale out on trades, right?
Yeah,
Yeah, and then you do a combination of also trailing as well. Now, here's an interesting concept, a question I would like to pose to you because I read this from one of the interview with the traders, the new market visits books, the market visit series books by Jack Schwager. I'm sure you heard of them, of course, right?
yes, of course.
Yeah, and there was one of the traders that he interviewed. I forgot the name of the guy, but he said because Jack Schwager will ask him a question where he says, because with trading you can keep tweaking and tweaking your systems and everything. He asked him, when do you know you have struck that turning point? When do you know that your system has got the age, you have tweaked it enough, it's got its sustainability, scalability, and reproducibility features. So in other words, the question what I would like to pose to you from there is, do you actually feel at peace when you exit most of your trades, or do you regret sometimes for coming out early or late from your trades?
No, no, I'm totally at peace when I come out of the trades. You can't again. So I have pre like if you're trailing a stock and you're looking to maximize profits and your plan says to do this and you do something different to what your plan says, then you can have regrets, right? Because you're not following your plan. But my plan says I identify that area, that's my take profit target. that hits there, then that's what my plan says. That's what my edge. That's my edge. So therefore, when it hits, I'm at peace. I move on to the next trade. There's no point regretting what the market has done afterwards when your plan says to exit a market at a certain point, because you've got the edge in your trade plan, and that's what your trade plan's for, and therefore you follow that plan. You can't have any regrets for following your trade plan.
Did that come to you quite immediately, or did it take some time before
I
you
think it
came?
generally takes quite a bit of time. It depends on the individual as well, right? Again, it comes down to a personal thing. Again, probably my experience within the markets from trading in the city probably helped with that, in terms of expediting that process. But yeah, I think some people, they need the experience in the markets to be able to get to that level of peace and that exiting the market. So I think that can take time, and that's something that can only come with experience as well.
Great. Okay, awesome. Now there's a few questions coming in. I'm just going to ask you all that in a bit. Just the last part of this section, and we got about 10, 12 minutes left. In terms of psychology, right? Do you have like a specific pre-trading routine before you start your trading and to get yourself in the zone?
Yeah, 100%. I do meditate. I meditate every morning, every session, before every session. And for it's something that I did before I actually started as an independent trader from a personal point of view, and it's just really helped me as a trader as well. And I sit there and say, it's like, if I meditate before I start trading, sometimes I can actually realize, even before I sit down at my desk and into a session, that I'm not in the right frame of mind to trade.
Wow.
So therefore, I can remove myself from that session before I even give myself a chance to perform badly. So yeah, 100%. I think meditation is, and in fact, I've got students of mine who literally have lost money for years, and then once they've embraced meditation, it is that emotional switch to being able to be profitable. Because a lot of traders as well, it's not that they have an inability to trade technically. It's from an emotional point of view, and meditation can really help with that.
It's incredible you say that because I think most people heard of Ray Dalio anyway, the biggest hedge fund manager of 160 billion assets under management. He's a big advocate of meditation too, because that's how it balances the right and the left lobe, and you get ideas as well
Yeah,
on how to build your strategy quite robust. So that's interesting because me myself, I do meditate as well. It helps a lot. In fact, even in our workshops, we do a short session of silent sitting, we call it. It's similar to meditation as well, where they can really see the difference, isn't it? Your mind
yeah,
gets so calm, you're so peaceful, and then at that point, you're so in tune, you're so sharp, and you're so aware
yeah,
that you know exactly what to do, what not to do, or if you're at peace, today's the right day to trade. I mean,
yeah.
that was spot on. I think that was good that you just really shared with us that. But out of interest, where did you learn that meditation? Is that something that you learned from online, just self-taught, or is that some?
It's generally self-taught. Basically, I had, not to go too deep into it, I had some anxiety issues like sort of 12, 15 years ago, and that sort of got me into meditation to really help with that side of things. And it's something that I continued. And once I realized that obviously it can help me from my trading point of view, there's a really good book called Trade Mindfully by Gary Dayton, who talks about the impact that mindfulness can have on meditation. And since then, I've just developed it myself. I have done a couple of online courses and things like that to really deepen my knowledge of practices and different practices and things. But yeah, initially it was all just, yeah, really just self-taught.
Oh, interesting. Yeah, you mentioned Gary Dayton, isn't it? Yeah, he was recently interviewed by Ninja Trader. He was just being interviewed before me, before I came in, and I met him briefly as well. That's
Ah, cool.
interesting. Yeah, me myself, I mean, I actually learned it from someone. Organization is called Art of Living. I think that those are the guys that I learned. It's breathing exercises, but it's really
Yeah,
very good.
yeah.
People can check it out if they want. The final thing, if you can, just for maybe just a quick glance, I mean, like show us like how would a typical day look for you on the charts? Like as of today, like if you were to scan through the charts, is there something you want to share with us, like some trades, some support resistance zones that you're looking at, and some buys?
Yeah, I mean, I can go through one or two charts just quickly to go through to show
Yeah.
you what I would look at. And obviously, generally speaking, my charts are already pre-plotted, and I'm just adjusting them, but I mean, I can look at. So generally speaking, I look at the DAX. Like if I
Yeah,
do
I think
DAX,
yeah.
so I would sit there and look at the DAX. Like I say, I'm generally looking at the hourly. Let's take the hourly as an example. So if I had a clean chart like this, I would literally go, okay, so let's plot my zone there. That's the resistance point, and that's the resistance in the market. Now, I don't necessarily look to definitively trade that, because again, if we go back to if we take it back to the overall context in the market, we know that the index market's on an uptrend. And as I said, I'm looking for historical footprints. I'm looking for repetitive footprints. This has only got one touch. So I wouldn't necessarily look to sell that area, but I identify it as a potential area of resistance. What I'm really doing on the DAX is, because I know that the market's in an overall uptrend, I'm looking for the area that I want to buy the market.
Hmm.
So what I would do is, and you can do this almost in a very simple way, just clone that zone on TradingView, and you can drag it down, and you just look for an area in the market which has got repetitive behavior. And I can tell you that area there is the area that I'm actually looking for. Again, if we go to the 4 hour and we just extend that across, you can see that actually this is the area we've got repetitive. It was here resistance, here support, here resistance, 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 resistance. And then if we scroll down into the hourly time frame, you can see price moved up and then it held it as support here to push higher. So that would be the area that I'm looking for in the DAX at the moment. And again, I'm not necessarily looking for that trade to be hit today. I've been looking for that area to be hit in the market for a while. So again, patience, waiting for the area to pull back. I've looked for the area in the market that I've identified that the market will move back to, and then that would be the area that I would attack. So I would have that, and I would then set an alert, maybe 50 to 100 points above that, so that once I get the alert, I can then go and analyze the price action into that zone as to whether I want to take that trade or not.
Oh
And
yeah.
I literally will then work through, have about 10 instruments that I look at. I look at the FTSE, the DAX, I look at sort of 6 or 7 Forex pairs, and then I look at oil and gold as well. So those are the sort of 10 instruments that I look at, 10 to 12 instruments that I look at. I work through that list to identify the areas that I want to buy or to sell, that I want to trade in. And then I have my watch list for the day, my trade plan for the day, and then I set my alerts. And when those alerts go off, that's when I go and identify the price action going into those zones.
That's interesting. Yeah, that's very, very good and nice and systematic. Is there any, I think I'm just running out of time. I think that's a good example, I think, for people to take away from. If I just match that up to our chart here, in fact, I think you know what? You're exactly showing almost the same thing that we would see. Let me just share our screen here, just on the DAX, and then we can take the last questions before we wrap up. That's on the DAX over there. If I go on the weekly over here, just defining the trend. I mean, this is perfect. I mean, this is the usual setups we love,
Yeah,
which is it's an uptrend, right? Trend is still on the upside. It's pulling back, right? It's a phase two, what we call.
yeah,
I want to capture that support area where it then turns into
yeah,
a phase one where a blue dot comes, right?
yeah,
So once I got that on the highest time frame, then the real question is, can I capture a ripple, that will turn into a swell and then a wave,
yeah,
right? So that's the whole idea. On the daily, it's showing a little bit of a downtrend at the moment in terms of a phase one, but is that a little bit of noise and gaining some support? I think that's things that they got to analyze from all the different time frames. For us, phase one, of course, you would expect that from the lower time frames, they're going down.
yeah,
But like you say, if they overlay your support and key zones, the real question then is that support level going to hold to then that 4 hour bottom, the blue dot, going to then become a daily blue dot and finally turn the weekly into a blue dot. And of course, you don't need to use such high time frames, like you said. I mean, you can even drill it down to, you can do the same concepts. Concepts will always be the
Yep.
same, the principles.
Yeah.
Or you want to capture a 15-minute bottom that becomes a 1 hour bottom, then becomes a 4 hour bottom.
Yeah.
And I think if they exactly overlay what you're talking about, I can definitely see that the probabilities will start to increase, basically,
Yeah. 100%.
in terms of capturing that bottom. I mean, for those of you already in here, I think we will send you the 7 steps to CTP, which gives them a bit of a framework. And then from Ross's side for YouTube, people also asking us, how can they understand about the framework? You can always go to 7 steps to CTP. But Ross, from your side, I'm already getting questions like, if they want to find out more about you and your kind of trading a little bit more, what is the best place to go to?
So my website is www.keysonetraders.com. But equally, I'm happy to give out my email address. My email address is ross@keysonetraders.com. Drop me an email. I'm more than happy to. I love talking about trading. I love trading. I've been doing it for 20 years. It's a big passion of mine. So I'm more than happy just for them to reach out to me, and give some more information, ask the questions directly to me. If there's anything within this that they've got some questions for, I'm happy to answer questions and stuff like that. So yeah, either via my website or just my email at ross@keysonetraders.com, reach out to me. I'm more than happy to answer any questions and help out.
Great. And in the last few minutes, we've got almost 5 minutes left. So I'll take all the questions now. So Kaldip had asked before, what are the best technical indicators to use in conjunction with support and resistance zones for making trading decisions?
I personally don't use any technical indicators. I think if I'm putting on my sort of like mentor hat, if somebody sat there and said, they wanted to use a moving average, again, what I tend to do when I think about indicators and stuff is I think about what ones are generally used. So I think moving averages, if you can find some sort of confluence with that. Yeah, that's probably the only ones that I've really got a lot of experience in. I mean, again, it comes back, if you can find an indicator that gives you a technical edge. Again, it comes down to back testing. Okay, I've got my theories and my strategies, which I've come over through years and years, but there's hundreds of indicators out there that I haven't had experience of. So unfortunately, I don't really recommend any other than maybe moving averages, because I don't really have much experience with them. But that's not to say there aren't other indicators out there that would work in conjunction with it.
Okay, that's great. Yeah, I think mostly you're trading mainly on price,
Yeah.
but that doesn't stop other people from looking at different things, I guess. One quick question that they have, key differences between horizontal and diagonal support and resistance zones?
Yes, I think whilst both are subjective, I think diagonal ones are much more subjective than horizontal ones. I think if you actually look at the ones that I'm plotting, it's quite clear where those key swing points are in the market. Whereas with more diagonal sloping sort of trend lines and stuff, there's a lot more subjectivity to it, a lot more interpretation, which leaves a lot more room for error, in my opinion.
Okay, interesting. And one more, how do false breakouts affect trading strategies within support and resistance zones, and how do you mitigate this risk?
Yeah, look, as I said, there can be false breaks. There can be what I call liquidity grabs, stop hunting, that sort of thing. Through experience, I have learned to probably give it enough room to counter that. However, I do in some of my online courses and my teachings and stuff, I actually do teach strategies in terms of how to actually take advantage of that. Because if you know that these sort of liquidity grabs happen and institutions do those sorts of things, and this isn't necessarily doing it the way that I trade now, I don't trade this way, but again, it's offering alternatives. You can wait for that false break. You can identify the support area. You can wait for the false break to happen, and then just take advantage of the false break, because the false break's already occurred, and then you can take advantage of the false break. And again, if you're tying in the zones with your strategy, if you get a confirmed bottom or confirmed top, when there has been a false break signal as well, a false break of the support resistance zone, that adds weight to the level because the market has moved out. Now you've got a false break. So you've got the pattern, you've got the confirmation, and you've got the area of liquidity that the market has now held. So again, you can tie it in with that to get the confluence for it. So you can't
Nice.
always mitigate against it, but you can't always stop it. But you can certainly learn patterns and stuff to mitigate against it.
That's nice. Yeah, that's good. I guess the key thing is always, how do you know that it's false? I mean, usually people only see in hindsight. How do you know it's false when in real time? I'm sure they can get in contact with you to find out more
Yeah,
on that.
yeah, I can teach some
Definitely.
characteristics and stuff like that.
Exactly.
So
I
it
mean,
takes a bit, yeah, probably not enough
spot
time
on.
to do it here, but yeah, there's some
Exactly.
characteristics in it to do that.
The last question before we wrap up, just literally got about 1 minute left. Do you so I'll just group them up together. Do you use support and resistance levels created on out of hours price to set your zones on
Yeah, so
indexes?
I certainly do on the forex markets because they are a 24-hour, 5-day a week market effectively. So they are valid. With index markets, I will take into consideration futures prices as well. So because obviously the market is still based on something, it's derived from an actual tradable asset. So I will take out of cash hours, but not out of futures hours price.
Okay, great. And the final one, what percentage of the ATR do you use to set your zones?
It's 50% of the ATR on the time frame that I'm plotting my zones. But again, that's just a very rough generic guide. You need to allow a bit of flexibility. That's it's not rigid. It's just a guide to give you a rough idea.
Awesome. I think Ross, thanks for that. I think we've covered most of the questions here, and that's the time that we got for today. Such a pleasure having you on board. For those of you who want to find out more, it's keyzonetraders.com, and you can contact Ross on the email address that he has given to you all. It should be on the YouTube chat as well as on our Zoom chat as well. Ross, thank you so much for your time. It's such a pleasure to have you today on the show.
Thank you very much
And
for inviting me. It's been brilliant.
No problem. Such a pleasure. And guys, I think that's pretty much it. And as we always say, till the next time. And I just remembered, check out your email. We'll send you the recording of this as well, so you can review it and go through the stuff in here. And we'll also send you 7 steps to CTP as well in your inbox. That's pretty much it from us today on the live trading workshop. And as we always say, till the next time, stay disciplined. I almost lost my train of thoughts there. So we always say, till the next time, stay disciplined, work out your plan, and keep trading consistently. Take care, traders, and all